with the approval of a US dollars 2.2 billion financing program made up of access to the international capital market for some combination of a Euro bond offer and a Sukuk bond offer. Perhaps a Euro bond of about $1.7 billion and Sukuk financing of another $500 million. The actual makeup of the financing, which will be done as soon as the National Assembly has considered and seen fit to hopefully approve of the borrowing plan, and the external borrowing approval is given, it will be done this year as soon as possible after approval. And the actual combination of instruments that will be raised will depend on what the advisors, the transaction advisors, the financial advisors, what they say about market conditions at the time at which we decide we want to enter the market. Of course, earlier in the year, we had shown the resilience of the Nigerian financial markets and their depth, their capacity, their increased complexity and sophistication by having a domestic issuance of dollar bonds which attracted Nigerians, investors from far and wide, as well as others. And the important point about it is that it used the Nigerian financial system, the Nigerian regulatory system, and Nigerian financial expertise and structures. And it was, apart from any other thing, it was a vote of confidence in the economic reform program of Mr. President, His Excellency President Bola Ahmed Tinubu. Likewise, this being able to access the international capital market is also a sign of the acceptance and the support for the macroeconomic program of Mr. President and indeed his entire administration. As we know, that economic program, that economic recovery and revival program to turn around the economy is focused on the macroeconomic pillars of market pricing of PMS and market pricing of foreign exchange. Those key pricings and those key situations have been achieved, particularly as of October 2, when we had once again in Nigeria local refining of petroleum products. That paved the way for the completion of the what was started in May 29, 2023, which was to correct the macroeconomic imbalances that were in the economy. So it is on the basis and the strength of the progress to date that we do have a window to access the international capital market for up to $2.2 billion in financing that is part of the Nigerian 2024 Appropriation Act as amended. Thank you. Memo that I presented to Council was for a approval for a Ministry of Finance Incorporated Real Estate Investment Fund. That fund is the basis for the revival and the return of long-term mortgage financing to the Nigerian economy. The Murphy Real Estate Investment Fund is going to be, in first instance, a 250 billion naira fund that will provide low-cost, long-term mortgages to Nigerians that want to acquire houses. It will help to complete or help to fill part of the gaping 22 million unit housing deficit. Of course, it will create jobs. It will stimulate economic growth. And of course, it will also pave the way for other investors, private sector, to also come in and participate in the all-important housing construction industry with huge benefits and knock-on effects throughout the whole economy. And the concept is long-term investors have the opportunity to earn market rates of interest on investment and market returns, market price, maybe even less, depending on market conditions. And that will be achieved by attracting long-term savers, life insurance companies, maybe pension funds within the limits of what is allowed, and other savers who want to save long-term, getting market rates. Their money will be blended with low-cost funding that the government has access to, funds that are available to the government at 1%, funds that are available for 40 years. And by blending the two, the seed funding by government on the one hand, and the funds that investors bring under a prospectus which the SEC has approved and which will now be made available to the public, that blending of funds, depending on what percentage of 1% money you merge with what percent with market-based interest rates, you will end up with affordable pricing on the mortgages. And as I've said, the tenor can be the likes of 20 years and more. And what that does is, as I said, it opens up the whole mortgage sector. It relieves Nigerians who normally will be faced with almost 30% interest rates, and they will be faced with tenors of 2, 3, 4 years within which they have to pay back. Now they will have rates closer to 10%. Now they will have tenors over 20 years. And that will be a tremendous relief, and is a promise kept by His Excellency President Bola Ahmed Tinubu. And as I've said earlier, the multiplier effects for the economy as a whole to drive economic growth and job creation are obvious to all. So that was the second approval that was received by the Ministry of Finance today.
Please like, share and subscribe to our channel for more in-depth analysis on current events and their impact. Leave your thoughts in the comments below. We'd love to hear from you.